Students, we are unable to admit more any other students. So if you want, you can join in the YouTube session. Please request your friends to join the YouTube session. We can't admit any more students. Please request your friends to join the YouTube. Okay, please tell your friends to join in the YouTube. YouTube streaming is going on there. Teachers are there at your college campus. Professor Binoy Kumar Shah is there for taking the YouTube streaming from the college campus. Please, we request
Okay.
you all to please join the session on the YouTube.
Ma'am, YouTube link.
YouTube link is given in the brochure also. You see, you open up in your classroom, you have the brochure, you open it up. Below the Google Meet link, there is a YouTube link also. Please inform your friends. Sir, once you say, then we will be starting the session.
I'm ready. We can start at sharp at 6.
Okay, sir. Then within two minutes we are starting.
Mhm.
Students, you all know the decorum of any webinar. All microphones shall be switched off. Sir will be taking the class. If you have any query at the end of the session, you will be given the time for the questions. You put your questions on the chat box. If you have any query, teachers are there who will be taking up the questions and we will be passing it to our respected speaker. Okay. No videos shall be open. If sir asks anything, you can, and give sir gives the permission, then you are allowed to switch on the audio and ask question to sir.
It's 6. We can start right now.
Okay, sir. A very good evening to our respected speaker, Professor Shomo Mukherjee, sir, and a very good evening to all the dear students. And it is our privilege today that on this evening, Department of Commerce has organized a student enrichment program. And such program has been organized with the full support and coordination from our respected principal ma'am, Dr. Moshumi Singh Sengupta, and our departmental in charge, Professor Dr. Ashit Kumar Mondol, and with the support of all the departmental teachers of Department of Commerce. The program has been basically organized for helping the student for through a learning session on the topic of financial accounting. So we are privileged today by the presence of Professor Shomu Mukherjee. We will be introducing students to you. Sir is an assistant professor in the Department of Commerce, Maharaja Monindra Chandra College, and has an overall teaching and research experience of over more than 15 years. Sir is working in the Department of Commerce of University of Calcutta. He is also associated with the Institute of Chartered Accountants of India, the Institute of Cost Accountants of India, and many other institutions in various capacities. Sir has completed his graduation and post-graduation studies from the Department of Commerce, University of Calcutta. Sir has been awarded with silver medal from Goenka College of Commerce and Business Administration and was also placed in the university merit list in the post-graduation level. He has also completed his MPhil from the State University. He has acted as a principal investigator in a UGC sponsored minor research project. Presently, Sir is pursuing his doctoral studies from the Department of Commerce, University of Calcutta. Sir has authored 5 books on accounting, 4 of which are published from Oxford University Press, and rest is from Pearson Education. Presently, these books are in the recommendation list of many universities across the country. He has also contributed in many journals and presented papers in different seminars at national and international level. Moreover, he has contributed in many peer-reviewed journals at national levels as well as at the international levels. He has also worked as a reviewer from various national and international books. His area of research includes earning management, financial services, accounting standards, bank risk management. So we welcome you all, at our college on this online mode of learning session, and we are privileged by your presence today on this evening, and we thank our departmental faculty teachers, our respected principal ma'am, and the governing body of our college, and all the office staffs and other people who have helped us to organize this program today. Now, sir, it is your session. You can please carry on the session with the students of our college. Thank you, sir.
Thank you, Professor Shaha, for your kind words for me. I'm really thankful. I want to take really thankful for providing me the opportunity. I'm thankful to Professor Mousumi Singh Sengupta. I'm thankful to Professor Ashit Kumar Mondol. I'm really thankful to you also, Professor Shunita Shaha, for providing me the opportunities to meet your students in this online mode. And last but not least, I'm really thankful to the students who are attending these sessions for me. Now, I'm coming to my sessions directly because I have a less time, only for an hour. Today, I want to give brief ideas of the financial statement of a sole proprietorship concern. Now, just a minute, students. I'm just sharing one file with you. I think this is visible to all. Okay. Shunita, is it clear to all of you?
Yes, sir, it is visible.
Yes.
Yes, sir.
We are going to start a fresh chapter, that is the financial statement of sole proprietorship business. Now, if you go through the syllabus, then it is very much clear to us that we should concentrate only on the sole proprietorship business, not on partnership, not on company, not any other mode of business other than sole proprietorship business. And more importantly, this chapter will contain a question in your syllabus, in your questions paper rather, which has the maximum number of marks. It's from 15 to 20. In the non-pandemic sessions, we are allotting 15 marks for this chapter. Now it may come for 20 marks question. Now, what is financial statement? Now, before giving the concept of the financial statement, I want to share my thoughts with you that accounting process, you have heard about the word accounting process. Now, it has been started from identifications of transactions. That means the events which are measured in terms of money that have to be identified at first. Once it has been identified as transaction, it is to be recorded in journal. Now, after recording in the journal, it has been posted to the ledger. Now, my considering the balances of ledger, in order to judge the arithmetical accuracy of my books of accounts, we may draft a trial balance. Now, this is the accounting process. So this is a step-by-step process, starting from transaction, then journal, then ledger, then trial balance. Now, how the business is running? What is the performance of the business? What is the positions of the business? In order to understand this, we have to draft certain statements and accounts. Like what I'm telling you. Yes, students, you have any problem? Now, what I am telling you, this is the final stage for determinations of the operating results and financial positions. Operating results or financial results and the operating positions. In case of a sole proprietorship business, we have to draft first manufacturing account, then trading account, then profit and loss account, and balance sheet. These four components are required for preparations of the final stage, to determine the operating results and financial positions. These four items, 3 accounts, 1 statements, are cumulatively known as the financial statement. So if anybody asks you the question, sir, what are the financial statement of a sole proprietorship concern? He will tell there are 3 accounts. Number 1, manufacturing account. Number 2, trading account. Number 3, profit and loss account. And last but not least, that is the balance sheet. The first 3 accounts will help you to determine the operating results. And the last one, that is the balance sheet, will help you to identify the financial positions of the organizations on a particular point of time. Now, students, why we are going to prepare the financial statement? Why we require this? Definitely there should be objective. Now, what is the objective of preparations of the financial statement? In brief, we are telling them as a final accounts. First, you have to ascertain the operating results. Ascertainment of operating results in different steps, different layer. Number 1, you are going to understand if the concern is a manufacturing concern, what is the manufacturing cost that you are going to ascertain through manufacturing account. What is the gross operating performance, that is the gross profit of the concern, that you are going to ascertain. What is the net performance, net operating or financial performance of the organizations, that we are going to analyze through this. So first step, ascertainment of operating results. There are 3 layers. If it's a manufacturing concern, you have to understand how much is the manufacturing cost. If it's not a manufacturing concern, if it's a trading or merchandising concern organizations, then you have to understand how much is the gross performance, gross operating performance of the concern, or gross operating results of the concern. You have to understand through profit and loss account what is the net operating results of the concern. And last but not least, that is the balance sheet, which reflect the financial positions of a concern on a particular point of time. Students, I need your attention in this respect. The first 3 account, that is the manufacturing account, trading account, and profit and loss account, these are the periodic account. That means for a particular period, maybe for a month, maybe for a quarter, maybe for a half year, maybe for the entire accounting year is to be considered as a period. And these accounts are prepared for a particular period. That means you know that the trading account is starting from the opening stock, it is ending on the closing stock. So for a period, how much is the movement of the goods that you are going to show through the trading account? But balance sheet is a point statement. So first three accounts as the periodic accounts, whereas the balance sheet is a point statement. On a particular date, you know that you are writing balance sheet as at or balance sheet as on. So on a particular date, what is the positions of the assets and liabilities that has been reflected through balance sheet? Now, I just mentioned here there are two types of business. What are the components of final accounts? In this respect, I mentioned two types of business. It may be a trading business or merchandising business. That means who are purchasing the goods and selling the goods. They are not going to manufacture anything. In those cases, we are going to prepare trading PL and balance sheet. But this is a case of a manufacturing organizations. We have to add one more account, that is the manufacturing account. So this is very much clear that in case of a trading or merchandising organizations, three items are required: trading, PL, balance sheet. But in case of a manufacturing organization, we need another more account in order to judge the manufacturing, cost of the concern. Now, I am focusing primarily on the trading or merchandising organizations. For today's discussions, I am not concentrating on the manufacturing organizations because what I will tell, as per the question that was set in the last 20-25 years, we saw that manufacturing account was not came in the question paper, even though it has been included in the syllabus. Okay, if the time permits, at the end of the lecture, I will come to this point. First one is the trading account. Now, what is trading account? Now, this is the first component of final accounts of a trading business entity. Now, what is trading business entity? I am focusing on the fact that trading means who are purchasing and selling, who are not going to manufacture any items or goods. This is the first point. So they involved in a purchase sell business. There are several stationery shop in front of your house. They are purchasing the goods from a wholesaler and they are selling the goods to you. It's a trading business. You are going to judge the operating results of buying and selling of goods and services during such accounting period. Now, I am highlighting the third point, how the trading account has been prepared by using the principle of matching. That is the matching principle. You are going to match the cost of goods sold with the sales, and by matching this, you are going to find out the gross profit or gross loss of the organizations. This trading account includes only two things. Number one, direct expenses. Number two, direct income. Now, majority of the items appearing in the debit side are my direct expenses, and majority of the items appearing in the credit side are my direct income. I am using the word majority here. Okay, I'm coming to this point later. Now, students, you know that there are three categories of account: nominal, real, and personal. Now, if you know the rules of nominal, you know that all expenses, losses, all incomes, gains are to be considered as nominal account. Now, this you have done while you have done your golden rules in the accounting, but I'm adding one point with it. If any account helps you to determine the profit, that account is known as a nominal account. Like in this case, trading account is by nominal, PL account is by nominal. In semester 1, if you have done consignment, it is also a nominal account. So what I am telling you, if any account helps you to determine profit or loss, that is also to be termed as my nominal account. Now, why we are going to prepare this trading? In order to ascertain the gross operating result. That is the gross profit or gross loss of a concern. Now, this is the basic pro forma. This is the basic pro forma of my trading account. I just mentioned few points. Any of the students, I need your attentions. Please, I need your attention, students. Can you say that in the debit side, I written here opening stock, purchase, less return, purchase return, carriage inward, other direct expenses. In the credit side, I recorded sales closing stock. We are going to record all the direct expenses in the debit side, all the direct incomes in the credit side. Now, first tell me what is direct expenses and what is direct income. And if you know this, then I can ask the next question, what is indirect expenses, what is indirect income. Any one of you, please tell me the answer. I need the answer from your side. What is direct expenses? Any one student?
Sir,
Yes, tell me.
sir, business-related expenses, I think known as direct expenses.
All the expenses are related to the business. Any expenses which is related to the person, maybe related to the proprietor, will not
That are
be trading on.
directly incurred on the particular item.
Directed?
You can directly added in the item.
No,
I
no,
think
no,
so.
no, no. Shomo, you will not.
Sir,
Tax-related
direct expenses like wages, power, electricity, that's all.
Why this is direct? That I am asking.
Without that, we can't do our manufacturing.
Sir,
If
because
it's
it
a
is bought by
manufacturing,
one person
Amrita,
only.
please, one by one, Amrita, that I am telling you, if it's a manufacturing concern, then it will not come in the trading. That's the problem that the misconception that you have, and not you, majority of the students. Let me come to my point of discussions.
Sir,
Direct expenses are
can I?
incurred where is directly changes in the volume. No. If any expenses which are related to purchase or purchase related activity, then that expenses are known as direct expenses. You can make a note for this. Direct expenses are those expenses which are related to purchase or purchase related activity of the concern. You just see purchases, carriage inward, other direct expenses like wages. You are paying carriage inward for bringing the goods, bringing the purchase goods to your godown, or bringing the purchase goods to your warehouse. You are paying the wages for lifting the material. You are paying import duty for bringing the goods outside of your country. What is direct income? Direct income is none other than the two items. Number one, sale of goods. Number two, rendering of services. Why I am using the word rendering of services? Suppose if the concern is a service providing organizations, suppose you are the owner of a car washing shop, you are not selling any goods. So whatever the revenue that you are generating by by rendering the service for washing the car, it's a direct income for you. So I repeat, direct expense means which are related to purchase and purchase related activity, whereas direct income includes only the sale of goods, number one, and number two, rendering of services. Is it clear to all of you students? Any doubts, any query?
Yes, sir.
Now, my
Yes,
next
sir.
question to you is that, sir, we are recording all the direct expenses in the debit side and all the direct incomes in the credit side. But sir, closing stock is my income. Is the closing stock income? If the closing stock is the income for you, then students, anybody can generate the profit by not selling the goods in the market. Then why the closing stock will come in the credit side, students? Any idea, student? You know that
Because sir, we can sell it later.
it's not an income right now of sell, not account of revenue generations, rather on account of matching. So I repeatedly telling you that debit side will come with the direct expenses, but credit side will come with a direct income plus any further adjustment required for maintenance of generally accepted accounting principle, primarily for the matching principle. This is the basic for my trading account. I think this portion is clear to all of you. Highlight, if it's a nominal, it will come either in trading or in PL. If the account is real account, it will come always in the asset side of the balance sheet. If the account personal, you have to see whether the amount is due to the person or it is due from the person from the viewpoint of the organizations or entity. If the amount is due from the person, like debtors, bills receivable, okay, it will come in the asset side. And if the amount is due to such person, it will come in the liability side. Now, balance sheet is the statement. So first two are the accounts. Balance sheet is a statement. It's a statement of assets and liabilities. As it reflects on a particular point of time, so it's a point statement. It is prepared with the real and personal account. So nominal account will not be considered while drafting the balance sheet. It helps you to understand the financial positions, financial health of the concern, and further financial analysis of the concern. Now, balance sheet can be drafted in two ways. The pro forma of balance sheet can be drafted in two ways. One is the horizontal format, another one is the vertical format. As there is no mandate in respect of any act on a sole proprietorship business, you can do in any way. We are focusing only on the horizontal format. Now, horizontal format. These two way primarily, these are the two way through which you can present your balance sheet. One is the rigidity preference order. Another one is the liquidity preference order. Now, what is the rigidity preference? If you go through my conception, I am just sharing my conception with you. The asset which are most permanent or fixed appear first, like goodwill, like trademark, patent, copyright, that is to be posted at first. After that, the assets which are less, which is easily convertible into cash, that are to be posted. So the assets which are most permanent or fixed appear first, and the current assets appear below them. In respect of liabilities, the capital or long-term liability appear above the short-term and current liability. This is also known as the order of permanence. More permanent asset, more fixed assets that are to be posted first. That means all intangibles that will be followed by tangible after that investment, after that current assets. And in the liability side, first capital, then long-term external liabilities, then current liabilities. But under liquidity preference theory, it is to